Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's April 24th. I'm Frank Curzio, Wall Street Unplugged podcast. So breaking the headlines and tell you what's really moving these markets. So on today's show, never, ever, ever doubt Elon Musk. It's time to take profits on gold stocks and why you regret not buying Bitcoin at these levels. Let's start with the big news from last night, which is Tesla. First on deck at a big technology companies report. We're going to see a lot of companies report after the bell today, including Meta. But they reported last night, and the results were not that good. Earnings, sales, kind of weak. But the stock is absolutely soaring today. It's up over 10%. And I'm watching the media outlets, and they have a lot of bears on and just a few bulls. Everybody's kind of bearish on Tesla these days. And the bears trying to figure out why. Hey, the results are terrible. I don't get it. I get it. I'll tell you why it's soaring. When I listened to that call last night with Elon Musk, I saw a guy who was in total control of his company. Total control. Which you would think that maybe that's not the case. I listen to a lot of these calls, guys. 30 years I listen to conference calls. I love them. And you have your ups and downs like every single company. And when things are bad, the CEO gets on and tells you, hey, this is what we're going to do. It's going to be like this. It's going to be like that. And for the bears, look, the negatives. I mean, you knew going into the quarter. You knew those negatives. You knew what they were. Especially since stock was down, 40% for the year to date? Going into the quarter. So demand for EVs was waning, which will cause lower vehicle volume. Tesla lowering prices like crazy over the past 9 months, which means lower margins, which then means lower earnings. Costs are still way too high. Tough competition from China. No clarity on new models coming out. That was the thesis going in for the bears. When Elon got on that call last night, I said, I've been doing this for a long time. And when you see CEOs with their stocks in the shitter, they had a bad quarter or two, they're trying to turn around operations, they're all over the place. They'll come up with this plan and say, this is what we're going to do. Elon Musk didn't come up with a plan. He already had a plan in place. And you can see he had it in place for the last 9 months. And let's start with lowering EV prices. I mean, that sucks for margins, and Elon, like any CEO, knows that their stock's going to take a hit when you do this. But there was a purpose to it. And it wasn't being forced. Oh, we need to lower. It wasn't being forced. They were leading this. They were the ones that were doing it first, lowering prices. It wasn't like everyone else lowering prices, so we have to lower prices on our product. It wasn't like that. They were lowering and everyone was following them. What was the purpose of that? Basically pricing every major American auto manufacturer competitor out of the EV market. And they did that. These are companies spent tens of billions of dollars playing catch up to Tesla. Only to do another pivot. I mean, that first pivot was in 2016, 2017. Did everything they can to lobby against Tesla becoming a real car company. Not allowing them to have dealerships, advertising, all this stuff. Ripping them apart. He's bad for national security. It's terrible. Every time there was a Tesla crash, they acted like it was the end of the world. The batteries are on fire. It's just constant. The media, constantly. The lobbying efforts were amazing to destroy this company. In 2016, 2017, GM and Ford threw in the towel and said, wow, Elon Musk really knows what he's doing. His market cap is bigger than the entire industry. And we need to do the same thing if we want a multiple similar to Tesla. Instead of trading at 8-9 times earnings, maybe we trade at 70 times forward earnings. Usually autos trade under 10 times earnings for that industry. Just put that in perspective, S&P 500 is roughly 19 times forward earnings. You see software companies trade about 27, 28 times forward earnings. You see manufacturing companies, even airlines trade maybe 8-9 time earnings with GM and Ford. Just like to put things in perspective for you. But they did a pivot and said, okay, we got to go all in. So they're spending tens of billions of dollars like crazy. And in 2023 now, what happens? They did another pivot. So when Tesla began lowering prices, GM Ford said, we can't compete, and decided to either cut EV production or push it out until 2026 and beyond, even though they still did not have the capacity to scale. They weren't able to do it. But knowing that the margins were about to get nailed, what did Elon do? He started cutting costs dramatically. We found ways to lower production costs, cut thousands of jobs. And when you look on the call and what he said, the Texas Gigafactory, so all-time production of its Model Y, while at the same time, cost of goods sold, COGS, improved to all-time lows. Free cash flow was horrible. Negative $2.5 billion for the quarter. But $1.5 billion was from an increase in inventories, updating the Model 3. But the other billion was 100% dedicated to AI. And Elon explaining this was awesome. Because I'm listening to the conference calls and everyone is saying they're getting into AI. No one's giving you freaking specifics. It's going to result in productivity gains. We're going to save a lot of money. But they're not specific. They're not telling you exactly how AI is going to benefit their business. Elon tells you exactly what he's doing. He talked about how AI is necessary to achieve vehicle autonomy and how it creates its own ride-hailing service. He said the only way to have end-to-end neural networks is to train AI systems on billions of miles of real-world data, which Tesla is currently doing and nobody else in the EV market or any car market is doing right now. And he's right. In order to train these AI models, you need lots and lots and lots of data points. This is why when you have the large technology companies that stole all your data and been tracking you for the past 15 years, literally 15 years, even longer, they have the data. Now, throwing AI on top of that is going to result in inference, predicting what you're going to do because you did this in the past. And every time you do this, you do this. To get more detail, more perfect. That's great for advertisers. They know exactly, not just, hey, you like this product. They know exactly when, what time you're going to buy it, everything. That's what this is about. That's why they're trying to create these systems, spending tens of billions of dollars to improve them every quarter. And you look at a $2.5 billion decline in free cash flow, it's a lot for a quarter. But Tesla has $27 billion in cash and investments on the balance sheet. So there's no financing concerns. You remove that overhang. We're in a high interest rate environment, higher for longer. You know, it impacts the most, it impacts autos. Very tough to get loans. Musk understands this. Right? It's going to result in fewer people buying Teslas. The cost of finance rises, and it's going to stay at that levels for longer. So he's providing favorable financing terms for Tesla customers, getting ahead of this headwind. You could argue that so are several other auto companies, but they're getting ahead of that headwind. The biggest positive of the call is the acceleration of the launch of new models from second half 2025 to later this year, including more affordable EV models. And he's, you know, a lot of times he gets ahead of himself, and I get it. The robo-taxis, autonomous vehicles, and you know, sometimes people are like, well, you said this is going to happen. When you have a plan like that, this is what investors want to hear. This is what they buy Tesla for. I mean, if you look at another CEO on this call, they're going to talk about, oh, the industry's terrible. And yeah, he's talking about everything he's doing to build this company to have more dominance in the future. And he's saying the affordable EV models, he could have stopped there, but he said, no, the new models are going to be produced at the same manufacturing facilities. So we fill up 100% of that capacity. So they're not going to need to spend billions building more factories to scale, which is what Rivian's having trouble with. Because they saw demand for their vehicles. And now they're like, okay, now we have to scale. Now we got to build, you know, it's tough to be in that position. It's a great position because I think outside of Rivian, nobody else in America is in that position of Tesla, other than Tesla. In a position where, hey, I'm going to order this vehicle and it's going to be there in a month or two. I can tell you, Ford, GM, other big OEM manufacturers, they're not there at all. You guys know. Ford Lightning, the Mustang, man, you're probably still on those lists. But Elon did a great job talking about the future, providing specific details on how Tesla is going to get there. How it's in perfect position right now to execute on these goals. The plan. And that's what every bull investor wants to hear. It's why they became an investor in Tesla, because of Elon Musk and his visions. And he laid it out perfectly as someone that's not behind the curve, but ahead of it and well ahead of it. I'm not sure if you're a bear, what your thesis is to continue shorting this stock. Yeah, I told you to avoid this stock probably 4 or 5 months ago after the previous quarter and cut production. I'm like, man, it's going to come down pretty hard. And it did. But if you're a bear, you might be saying, well, it's trading at 50 times forward earnings. This was never a valuation story. I mean, if you're based on that, you have to look historically of where a company normally trades. And this trades at 70 times forward earnings. It's trading at 50 times forward earnings. There's never been a valuation story. Come on. If you shorted it based on valuation, you're living on a park bench someplace outside of the last 6 months. Estimates have been lowered dramatically across the board, so expectations have been lowered. It's going to be a lot easier to show growth on these depressed levels. You had no news on new models. I heard that. You know, he's talking to this guy. I don't know when it's going to happen. That changed yesterday. New models going to roll out well ahead of schedule, including a low-priced EV, which is going to fly off the shelves. This targets the biggest EV demographic in America, which is young car owners under 25 years old. Climate change, everything. You see the schools. I mean, these are EV people. And they have plenty of cash in the bank, so no financing concerns. Now look, you may hate Elon Musk and think he's an asshole. Hate him for personal reasons, whatever. I don't care. Hold up a sign, do whatever. That's not what this is about. This is about making money. This is about your investment. You got to put that shit aside when you're investing. But every time this guy has his back against the wall, he excels. Every time you bet against him, he delivers, like Reed Hastings on Netflix, Larry Ellison from Oracle, the late Steve Jobs, Warren Buffett. How many times has Warren Buffett, the haters, give him shit when he underperforms for like a 6-month or an 18-month period? Give me a break. Don't bet against winners. It's the dumbest strategy in the world when it comes to investing. Not to mention, if you were a bear, pat yourself on the back, you were right. The stock was down 40% into the quarter. Take the victory lap. And I see this all the time when people are bullish or bearish. When they're right, they don't know when to get the hell out. I see it all the time. I hated oil 3 years ago, 4 years ago. And I had someone on my podcast tell me about oil, and he was right, and oil surge, and he was all over social media. This is great, oil's on, and he should take a victory lap. And it went to 90s, high 90s. And then he's like, he became more bullish when it went from whatever it was at a time period, 30 to 90 or whatever. Remember future pricing and zeros during COVID and stuff like that? It was crazy. He made a fortune on it, but he was more bullish after being right. And you got to take a step back because all the reasons you thought to buy that stock or sector or whatever have come to fruition, but you become even more bullish because the greed kicks in and it's hard. I've done it in the past. Now reverse that with the shorts. You were right. They're cutting prices. And you see deliveries down. Competition from China. Sentiment on EVs has gotten lower, right? It's declined. You were right. The stock was down 40% going into the quarter. Take your victory lap. Instead, now you're coming out even more bearish than you were when the stock was at 240, 250. But the stock trading, around the 155 level? After it was trading at 300 9 months ago? Again, take the victory lap. It was in the 140s, 130s, I think. Before they reported last night. 142, 143, now it's near 160. But be careful, because a lot of times when you're right, that's okay. Listen, I'm not telling you to sell your whole position, but take a lot off and congratulate yourself. And then if you're really right, you make a fortune. If not, if you lose, say you take 75% off, then it's not a big deal. You made a ton of money. But for the bears to come out today after this quarter where Elon Musk delivered, they delivered against very super low expectations and everything that everyone said was wrong with the stock, including me. It's different now. It's well positioned with much less competition in the market. The other guys aren't coming back into this market. No way. They don't even know how to. They don't know how to produce these things. We found that out. They had 5 years, 2016, 2017. Where have you seen all these EVs from other companies? Maybe a few here or there, but not like Teslas, which are all over the place. Don't bet against winners. Simple strategy. Don't bet against winners. It worked for a little period, a little bit, right? Last 4 or 5 months it worked. I think Tesla's going right back over $200 a share. A lot of positives from that call, and that's why it's up today, even though they missed estimates, because the estimates are about the past. That was the worst quarter. When you're looking at the future, that's what drives the stock. It's the guidance. It's what's going on ahead. And he said a lot of great things. A lot of great things that are going to press the bulls and probably have them ante up and put more money into the stock at these levels. That's why it's up. Gold's been pulling back from all-time highs. Oh, no. After the LML hit 2,400, around 2,300, 2,330. That minor pullback. It's been an incredible run since gold was trading around 1,800 an ounce in November. Again, now it's pushed to 2,400 an ounce. But over this time, what have we seen? So the bulls, the people who own gold for the last 30 years, have been all over social media. And good for them, because it's been such a long time. But they're pounding their chest and saying, I told you so. You got to buy gold. I told you gold. Even though their thesis for holding gold has been totally wrong. Like, hold it for a store of value. In a zero interest rate world, that's the worst thing you could ever do. But all asset prices surged for over a decade, while gold did absolutely nothing. Or it's an inflation hedge. I told you it was an inflation hedge. Well, why didn't gold go to over 4,000 an ounce when inflation hit 7, 8, 9%? What was that, 12, 18 months ago? Or buy gold because the end of the dollar. By the way, if that happened, you're probably going to get mugged and raped inside your house and get killed. I don't think it matters if the dollar collapses. I don't think you've seen what happens when just other countries devalue their currency. But that was a thesis for many of the diehards for the last 30, 40 years. The end of the dollar. So you need to own and store gold as the dollar crashes. The dollar's been soaring this year, absolutely soaring. What about the thesis to own gold when real interest rates are low? Yeah, gold traded at $1,300 an ounce and did nothing from 2013 to 2017 when real interest rates were near zero. Doesn't matter. Gold's going higher, and if it goes higher, you're right. And I mean that. I'd rather be wrong on my thesis, but make money on the stock all day than the other way. Because that's what happened with when it came to the economy. Not a lot of people were telling you that interest rates are going much, much higher when they're 2.5%. So it's going much, much higher. Saying that they're going to stay there for much, much longer than expected. Yet I didn't think stocks will surge in a high interest rate environment. As every bullish thesis of 2023, everybody who was bullish, the number one reason was interest rates are coming down. They're going to start going lower. Into 2024, we might not even see that through 2024 now. But if you look at the price of gold, why has it gone up? Because central banks are loading up on it. As if the U.S. pulled Russia from the SWIFT system, which was a surprise to every country, saying like, wow, what happens if the U.S. doesn't agree with our climate change policy? They're going to press a button and destroy our economy? Wow, we better wean ourselves off the dollar a little bit. So central banks still buying gold. So it's a simple case of strong demand. Wow, it's that easy. Strong demand. Not all the other bullshit that you hear about gold. But let me tell you something. When you look at the current setup of gold, I'd be worried. And if you look at gold and the dollar, they have had an inverse relationship forever. Dollar goes lower, gold goes higher, dollar goes higher, gold goes lower. And this dates back to the 60s. Very, very long time. But what are we seeing today? We're seeing the dollar rise sharply. In fact, the dollar, outside of a brief period, this is a 3-month period in late 2022, the dollar is at levels not seen since 2002. Over 2 decades, in case you can't count. And you have gold rising alongside of it, which almost never happens. And to put this in perspective, we've only seen periods, and I'll throw technology in there as well. 2022 would have technology, it crashed as interest rates are going higher. You say, well, Frank, interest rates kind of stayed high, but there was an anticipation that they were going to go lower. And again, the markets are forward looking, so technology started to rebound sharply. So it's interesting to see where technology is going to go from here, with interest rates staying high for longer. But when it comes to tech, okay, we've only seen periods where tech is going higher, gold, and we'll throw raw materials. I mean, silver's higher. You're looking at copper, coke. Raw materials are higher in general. And copper's killing it right now. So we only see periods where tech is going higher, gold, which raw materials is going higher, and the dollar's going higher at the same time. We've only seen this happen 5 times in the last 60 years. So it's extremely, extremely rare. So we look at the dollar, and the dollar surging. Gold prices should actually be crashing right now, but they're not. How long could this last? I mean, this is a big disconnect. Also, real interest rates, they're at the highest level since 2007. That means you're going to earn a very nice return just keeping your money in treasuries or interactive brokers. Throw it in there. They're going to give you 5% interactive brokers, which is much better than owning gold, which pays you nothing to hold it. And you're looking at gold and you're excited, and you should be, and good for you. Near all-time highs. It's always nice when you say all-time highs, but let's put that in perspective. Because gold's only up 20% over the past 12 months. Even though it's at an all-time high. That compares to the S&P 500, which is up 17%, but if you include a dividend, it's close to 20%. And then when you look at Bitcoin over the same period is up 138%. Now, I want you to think about that, especially if you own junior miners. And you're playing the cycle here. I'm very familiar with junior miners, and a lot of people speak at Vancouver conferences all the time. A lot of my friends that listen to this podcast in Vancouver are probably not going to be happy about this. But I really don't care about them. I care about you. So gold, pretty much at an all-time high and close to it. Meaning junior miners, you would think, should be up 3x to 5x right now. Especially as the sector has been super depressed since 2012, 13. And if you look at the main junior mining ETF, which is GDXJ, it peaked in 2011 at 150. Okay, that was 2011. Remember these numbers, not a lot. Remember this. So it peaked in 2011. The ETF was at 150, and gold prices hit $1,800 an ounce back then. Today, gold's over $2,300 an ounce. And this is the market, the conditions you prayed for. The reasons why you patiently held junior miners for over 10 years, the grand moment, the time to pound your chest and raise your middle finger up and say, F you, I was right. This is why I held on to this. I knew gold was going to go higher into all-time highs. So GDXJ, you know where it is today? Again, $150 in 2013, gold price $1,800. Today, gold price at $2,300. It's at 41. Up only 10% over the past 12 months. That's what all that patience has led to. Now imagine if you bought Bitcoin in 2013. You could throw almost any asset class in there, but people like to compare Bitcoin and gold. Like you could own either one or the other, not both. But imagine if you bought Bitcoin in 2013. What was it, around 250? It's up 18,000% plus, compared to 71% for the junior miners. Well, the perfect market for gold, we're seeing all-time highs. And I'm not taking the highs of 2012. I'm talking about the bottom of 2013 when gold crashed. I'm not taking it, how people say, oh, my performance is from, I'm killing in my performance. And you look in this, I've seen this on social media. Like, our performance is great, and it's highlighted. I know these people have been around for 10 years, but it's highlighted from, like, April 2020. I mean, give me a fucking break. Who's not up since then, right? You could have bought anything, any stock at all, and you're going to be up tremendously since then. Maybe outside of gold, gold stocks. But right now, with the perfect market for gold, we're seeing all-time highs, and you're not benefiting. I'm not saying this to be I won't say the D word, but an asshole. I'm not saying to throw in your face, since I do own a few gold stocks with private placement still. Also gold coins as well. It's just not a big position in my overall portfolio. I'm just trying to put things in perspective for you. Trying to help you. So you can make more money. You can go on more vacations with your family, buy a new home or a car, maybe have financial freedom. And I know you're conditioned. People are always conditioned a certain way. You listen to certain people. You listen to certain people who never really change their mind, no matter what the conditions are. They're the worst people to listen to. The facts change. That's what smart people do. You adapt. That's how come I've been doing this for 30 years. Because when I am wrong on things, I change. Which you're going to be wrong a lot in this business. You just don't want to get annihilated when you are wrong. And by doing that, and by preventing that, you got to focus on change. The reasons why you got something wrong. But owning gold stocks, this is something I've been a part of for 20 years. And some of the biggest people in mining. I've taken trips in helicopters. Ross Beatty, hanging out with Rick Rule at private dinners. Eric Sprott. Baron Katusa. Frank Juster. Just the list goes on and on of the people that I was introduced to by busting my ass, going to Vancouver 4 or 5 times, which is not easy to do from Florida, by the way, especially from Jacksonville. It's at least 2 flights. Getting home is a nightmare. But when it comes to speculating, guys, which every single one of you and every investor in the world should speculate with a small portion of your overall portfolio. If you're 99, speculate with a little bit less. If you're 25, speculate with a little bit more because you have more working power. You can afford to lose it. And by speculation, I'm not talking about buying a small cap dividend paying stock, but an investment that if you're right, it could change your life. That's why we're doing this. That's why we're investing in the stock market. Well, something you invest in, if you're wrong, it won't hurt you too much, since it's money you could afford to lose. Okay, that is a definition of speculation. And based on that, if you want to speculate with your money, buy crypto and buy altcoins. Because the amount of money you could generate there is more than you'll ever generate in gold in any stock, ever. Trust me on that. Especially now, because the fundamentals for crypto have never been this great. And it's not just Bitcoin. We just saw the halving. Everyone's like, has events. And this day, you got to do this. And that. Yeah, listen, that was priced in. We were talking about it 4 months ago. And 4 months before that, we were telling you to buy Bitcoin. And recently, we were telling you 4 months ago to buy altcoins. And those recommended 5 of them. And I think within a month, the average gain on those was 70%. So you see Bitcoin pull back into the halving. Everyone's like, what's going on? How come it's pulling back? Well, maybe it's because it went up 70%. Now it's up 40%. The year to date, I mean, compared to 15% for gold, everyone's talking about gold. It went up too far, too fast. Just like Tesla went down too much. Maybe it should have been down 20, 25%, not 45%. But you want to speculate with money, buy Bitcoin here, which is not much of a speculation. It is, but it's not crazy, not going away. Altcoins are more speculative than that, but buy altcoins because if you're looking at the halving, which now happened, Saturday? If you look at the halving, 18 months over the halving. After the halving, altcoins outperformed Bitcoin by 3-1. So again, the last halving was when? It was Saturday. It happens every 4 years. So whatever, this is the 4th one, I believe. But the next 18 months after that, Bitcoin goes up an average of 600%. I'm not saying it's going to go up 600% this time. But altcoins go up over 1,800% and outperform 3-1. So don't worry about the 600% because that would be amazing from here over the next 18 months, which is definitely possible. Definitely possible. But let's say if Bitcoin just goes to 100,000, which I've been telling you about. And I haven't saying I'd never put a time. Oh, it's going to go there in 3 months. It's going to go there in a month and a half, right before the halving, right after the halving. I don't give a shit about what month. It could happen 6 months, 12 months, 24 months. It's going to 100,000. And if you believe that, you have to buy altcoins because they're going to outperform. They always do when Bitcoin goes higher. And that's where you want to put your speculative dollars. not in gold stocks, especially since two major headwinds that are usually terrible for gold, has always been terrible for gold for the last 60 years, rising dollar, high interest rates. Those two are not going away anytime soon. Now, speaking of Bitcoin and giving you the details of why it's going to go higher, next Tuesday, April 30th, 7 p.m., hosting a live event called After the Halving. It's going to be our third installment on our Crypto 2024 series. It's 100% free. It's 100% live. Not one of those where, oh, it's a tape version and there's a PowerPoint presentation and you don't even see the guy. No, it's me. You're going to see my ugly face on there. You're going to see the timestamp. It's live. And during the presentation, I'm going to show you, not tell you. Anyone can tell you anything they want. I'm going to show you by sharing my screen, real time, live, show you why Bitcoin going much, much higher, it's inevitable. It's inevitable. And when it does, again, I want to pound this in your brain because I want to see you make money. I want you to buy those altcoins. And not all of them, there's certain, and you have to do your research behind them, but the gains that you're going to see are incredible, which is what we're currently seeing in our crypto intelligence portfolio. Now, after the event, and I keep these events short. It's not going to be like 45 minutes, you got to listen to me. No. It's going to be probably about 15 minutes, maybe 15 minutes, probably less. And during that 15 minutes, I'll also be sharing the best crypto AI opportunities. And man, this is where you'll really see innovation. Open source platforms on the blockchain. And there's new AI coins being launched. Most are bullshit, pump and dump garbage. But I'm going to cover the ones funded by some of the biggest venture capitalist firms, including several that are being run by superstars in the AI industry that left Google, that left Microsoft, that left amazing jobs to come run these small companies within crypto. Again, when we say altcoins, these are software companies. But they left these big technologies to build these crypto platforms because there's going to be tons of innovation taking place. When you have it on a blockchain, you have open source. Holy cow, that's exciting stuff. We have the short presentation. After that, I'm going to do a live Q&A. Pretty sure many of you listening to this attended one of these events already. And the Q&A, it take a while, hour and a half. As long as you want, you're asking questions. As long as you want. If you ask 2 questions, I'm gone in 10 minutes. That's cool. I get home early. I have my wife asking me a question, actually live. She's asking me, what time are you coming home? I'm like, I'll be home soon. Got some more questions to answer. In the Q&A, you get to ask me any question you want about crypto. And to register, just go to CurzioCrypto.com. It's easy. So Tuesday, April 30th, 7 p.m. sharp. Don't wait to register, especially if you have a question. So I'm going to answer in order. Once you register, you get to ask that question, put the queue right away. Meaning I'm definitely going to get to it very early in the Q&A. I'll say your name, your first name. I'm not going to give away your address and everything else. Just your first name. A much better chance to answer your question if you ask it early on when you register. Again, it's free. You could register now, register Tuesday at 6 p.m. It doesn't matter. By Tuesday at 6 p.m., I could tell you we're probably going to have 100 questions in there. And any question, almost any question. If one of those questions are like, hey, Frank, can you share all the current recommendations in your $5,000 a year crypto intelligence portfolio? I see a personal response from me that says, fuck off. And it might not be from me. I'm going to say it's not going to be by me. It might be by me, but I'm not going to let you know that. Promise it won't be me. But seriously, if you have any real questions, it's for the Q&A. It's free. Take advantage of it. Okay? But if you register now, going to improve your odds of me answering the earlier you do so. Just go to CurzioCrypto.com to register. Okay, guys, questions, comments, I'm here. Email me, frankkurzresearch.com. As always, thank you. Really appreciate all the support. Thanks so much for listening. I'll see you guys tomorrow. The one and only Daniel Creech on Wall Street Unplugged Premium. See you then. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Could the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.